Let's look at the data. In today's market, everybody is chasing some kind of edge. But what if the most powerful signal isn't buried in some complex algorithm? What if it's hiding in plain sight, driven by the stroke of a pen in Washington? Today, we're diving into a massive policy shift and the institutional flows that came right after it. So back on July 4th, 2025, a piece of legislation called the Strategic Reinvestment Act was signed into law. And listen, market commentators are already calling this one of the most significant realignments in modern history. This wasn't some minor tweak, no, this was a seismic event, and it was specifically designed to fundamentally reshape how capital flows through the entire U.S. economy. And the scale of this thing is just staggering. The big, beautiful bill, as it got nicknamed, pumped $3.3 trillion into the system. Look, a number that big doesn't just make ripples, it creates tidal waves, the kind of waves that can lift entire sectors up while completely submerging others. This right here, this is the catalyst. Okay, now here is where the data gets really interesting for us. A bill of this size, it's not going to go unnoticed, right? Especially not by the people who literally wrote it. And in the time leading up to and just after its passage, we saw a major anomaly: 585 congressional trades in sectors that were directly impacted by this new law. Folks, that's not just market noise. That is a clear divergence from the norm. It's a signal that the informed money was on the move, and it was moving fast. So how exactly does a $3.3 trillion bill trigger a massive market rotation? Well, it's actually pretty simple. It completely rewires the government's spending priorities. This isn't some random market fluctuation we're talking about. It's a predictable, top-down-driven sector rotation, and it creates a very clear list of winners and losers based on one simple thing: who gets the funding. Let's break down the mechanics here. On one side, you have the winners. We're talking defense, border security, and traditional energy. These sectors are about to get a massive fire hose of capital pointed right at them. And on the other side, the losers, the entire EV ecosystem and renewable energy. They are now facing some serious policy headwinds because that federal support is being redirected. It really lays out the two sides of the trade, clear as day. All right, let's dig into the hard numbers so you can see exactly where this money is flowing. For the winners, the bill carved out a fresh $150 billion for defense contractors. Think Lockheed Martin. Another $100 billion went straight to border security and ICE, which is a huge boon for data and surveillance firms like Palantir. And if that wasn't enough, there's a massive $4.5 trillion in tax cuts over the next decade, which just adds fuel to the fire for these traditional industries. And, for every action, there is an equal and opposite reaction. The bill mandated a $488 billion cut in clean energy support. That's a direct hit to companies like Tesla and NextEra Energy. It also projects $930 billion in Medicaid savings, which creates a ton of uncertainty in related healthcare sectors. The capital is literally flowing out of these areas and into the policy winners. Now let's circle back to those 585 trades we talked about. We're going to really analyze this data to see exactly how the informed players, we're talking specifically about lawmakers here, positioned their own capital right before these policy shifts hit. And the crucial point to understand is that this rotation was totally predictable for anyone who had insight into the legislative process. And the data is just undeniable. Look at this. Representative Julie Johnson pulled in a 97% gain on Palantir. James Comer, 83%. Marjorie Taylor Greene saw a 73% return on defense tech. Michael McCaul, he locked in an 80% gain on General Electric. Come on, these are not lucky guesses. This is strategic positioning ahead of a known catalyst, pure and simple. But what's really compelling here is the pattern that emerges when you dig in. Notice the heavy concentration of trades in big banks and defense. Then look at the timeline. See that huge spike in trading activity right there in January 2025? This suggests some very early positioning to absolutely maximize gains from the policy shift that they knew was coming. Okay, so we've seen the catalyst, we've seen the rotation, and we've seen the signal from the informed money. What does all this mean for us, for retail traders? How do we actually build a strategy around this kind of data? Let's try to synthesize all of this into a clear bull and bear case. So here's the strategic breakdown. The bull case is pretty straightforward. Policy is an incredibly powerful and often very predictable market driver. If you track the trades of those with policy insight, it can provide a high-fidelity data signal for spotting these sector rotations early. The bear case, though, argues that we shouldn't totally write off the losers. Companies facing headwinds, like a Tesla, they still have massive technological advantages. And the renewable sector, it's going to continue to find support at the state level. these could actually become deep value opportunities down the road. This entire analysis, the trillions of dollars, the obvious rotation, the incredible returns from these informed players, it all brings us to one critical, forward-looking question. It's a question that I think every single trader needs to be asking themselves right now. Think about it. In a market that is just saturated with quant funds and high-frequency algorithms, is the ability to anticipate and trade on government policy the most valuable edge left on the table? The data we've just walked through today strongly suggests that understanding the flow of money out of Washington could be the real key to unlocking market outperformance. A lot to chew on there. That's all for this breakdown. As always, stay disciplined, stay liquid. We are tracking these flows in real time, so while you're analyzing your next move, check out some of the tools we use in the description. You can sign up for Public to get $20 in free assets, check Webull for that BTC promo they're running, or maybe look into NVDA over on Moomoo. All the links are down below, and hey, like and subscribe for more deep dive analysis like this. And just a reminder for everyone, this analysis is purely for educational purposes. It's based on data that changes really, really fast. This is not financial advice. Please always conduct your own due diligence before making any decisions.